Good evening, everyone. Okay, so I'm going to talk about today a little bit about range bar charts. Those who are not familiar with range bar charts, so I would give a brief explanation as well. And if you have any questions, you can ask at that time. And then we will move forward with the order flow analysis based on range bar charts and what are the things that you can do with this. So let's begin with range bar charts. So how many of you know about range bar charts? How many of you have tried and tested in our platform in the past? Okay, many of you have not heard about range bar charts at all. Okay, let me explain a brief about this first of all. So this is your regular candlestick chart, right? Let me remove other things. And so what it says, so if it is a 5-minute chart, a candle will form for every 5 minutes. Okay. So now you can understand that there are X number of candles in a day. So there can be like we have about 375 minutes of trading. And so you'll have that many number of candles available for the day. However, in range bar charts, we are looking at of candle forming or bar forming based on a particular movement of prices. So let's go into the chart of Bank Nifty, wherein I have selected the option range bar. And in this range bar, I've given 1000 ticks, so which is about 50 points of movement in Bank Nifty. So what it means? So here now, every 50-point movement, a new candle will form. So let's look at today. So when the market started today, there was a first 50 points were happened in the first minute itself. Like, this is a time. If you look at the time here, 9:15, 9:15, 9:15, 9:15. You see the time at the bottom. Okay. So all at 9:15, 11 seconds, we saw all these 4 or 5 bars formed within that 11 seconds of the start of the market. What does that mean? So market did almost 50-point movement 5 times in this first 11 seconds. So if you look at it, 9:15 to 9:11, you saw 5 bars formed. Is this clear to you all? So which means that you will see in range bar chart, every candle is of same size. It will not be, if you look at the high and low, they will have a 50-point size. So it will not be bigger than 50 points, because you will see that every time the market moves 50 points, it will form a new candle. So those who cannot see it, just look at the bottom where the time is. You can see the time here. Okay, so you can see the time here. So from 9:15 till this next candle where I can see the time. So basically, these 4 candles were formed in that very first second of that movement, where almost market moved almost 50.4 times. Okay, and up to the 11th minute. So basically, in 10 seconds, basically, market moved almost 4 times with the 50-point movement. At 9:11, you can see another candle form. After that, it took almost 17 seconds to form another candle. So this is what happens if you look at the range bar charts. So you can see that after 9:15:28, next candle was formed at 9:16.06. So this happens in the morning because of the volatility when the market starts. After that, it cools down a little bit, but this gives us an indication of what kind of a volatility that is there in a shortest period of time. So you are not bound by the time here. In a regular candlestick chart, it will form a candle every 5 minutes, 10 minutes, or whatever interval that you select. Here, the candle will form based on the range of that particular candle. So if I've selected 1000 ticks, which is about 50 points of Bank Nifty, so every 50 point, the movement it creates a new candle. Now, what also you need to remember here is that it will also see that every time you see a candle, you will only see a wick only either on the upside or at the downside. If it is a green candle, you will see a wick at the bottom. And if it is a red candle, you will see a wick at the top. Why is that? Because when the market closes with the 50-point movement from the low or the high, new candle starts. So there is always, like say for example, when this candle was closed at this level, a new candle was started. This candle was closed, new candle was started. This candle was closed, a new candle was started. So always the close will be, and the high and the close, or the low or the close, will be the same. If it is a green candle, the high and the close will be the same. If it is a red candle, low and the close will be the same. So here you will see, now if I unzoom this chart like this, so if you can see this, now what you see here, I have a day break for every day. If you see this, these are day breaks, right? Now, if you had looked at the regular candlestick chart, what it will look? It will have a standard number of candles. Okay, you can see the day width of this particular day divider is the same. Whereas if you look at the range bar, some days market may be very volatile and you will see a large number of candles because of the volatility. If the market is not very volatile, you will see less number of candles. So for example, today we see a large number of candles as compared to yesterday. So yesterday's market started around this level, closed here, and we had probably not many candles. I can't count the candles out here. But if you see, there were very limited number of candles out here. But today, when the market started moving, there were a lot of volatility. So I will repeat again how to put this chart. So if you go to the charts here, okay, you will have, by default, you will see a time chart, right? Time chart will have a X number of minutes that you can select. Here, you'll have to go and select range bars. Now here, you can select the number of ticks that you want, because our application allows you to select ticks instead of points. So 1000, like say, when I say 50 points, it is of 1000 ticks. So 50 into 20 ticks in a Bank Nifty symbol. So every point is of 20 ticks. Okay. So hope it is clear how to plot this chart on Quantower. So I will tell you how to select the number of ticks. There is no hard and fast rule as such. But if you look at a daily ATR, and suppose if the daily ATR comes to say about 500 points, okay, everyday movement in a Bank Nifty, probably you'll see a movement of around 500 points. So you can simply divide that by 10. There is no hard and fast rule. You can divide by 5, you can divide by 10, you can divide by 20. It's entirely up to you. I'm not going to say any specific thing, but I've just taken it as divide by 10 of the ATR value. So if the ATR value is about 500 points movement in a day, I divide that by 10, so I can get 50 points. And once you selected it, don't go and keep changing it. Maybe you can review this probably after every 6 months, or after a big movement in that particular symbol itself. Otherwise, there is no need for you to change this. In the case of Nifty, probably you can select about, I've taken 400 ticks, which is about 20 points. You can even take 500 ticks as well. So no problem with that. So I've taken, there is no hard and fast rule to calculate the number of ticks. It is entirely up to you. But why this is important, why a range bar chart is important for you to look at, is because it doesn't look at time. Okay. Now what happens, when the markets are very calm, not doing anything, okay, so there is always going to be a lot of noise with the regular candlesticks. I'm not saying that candlesticks are bad. I'm not going to tell you unlearn what you learned so far. Okay, this is nothing but old wine in a new bottle. Okay, so there's nothing that I'm going to say what you learned in the past is bad. I would say you apply all those principles, all those things in this chart, and giving you a new perspective of how exactly you can look at this chart, especially and to identify big volatilities and cut noise whenever there is not big movement in the market. Especially, for example, now, like say those who are trading crude oil, for example, most of the time during the day, you will not see this movement at all. Like say, suppose I put a particular number of ticks as a range bar chart, a candle will not form for probably for entire 5 hours, 6 hours. There is a possibility because market may not move much in that particular time. Market moves only when there is a big movement in the US or because of certain news driven events during the daytime. Otherwise, crude oil prices are fairly calm, not moving much. Okay, so this is one of the way to avoid noise. You could use a range bar chart. The principles of other things related to order flow will always remain the same. I'm going to come back to that as well. Let's look at what are the things that you can do with this. So I now you know what range bar charts are all about and why you can use this. So you can use this to avoid noise because unless a big movement happens, the new candle will not form. So if you look at this particular movement, for example, okay, and if you look at the same time, you will see that there were lot many candles in this range. Whereas if you look at the same time, you will see lot less candles. Hope this is clear. And those who are looking at trading patterns, like say chart patterns, breakout trades, this is going to be a very helpful thing. Like suppose I am looking at doing some kind of a breakout trade, you will be able to identify the consolidation very easily. Now, another thing that is very important for you, why one should use range bar charts, you know when to take an entry. Suppose let's assume that you already decided that you need to buy. Okay. But what you do in a regular candlestick is you wait for the candle to close. But you don't know where that candle will close in that interval, right? Whereas in the case of range bar chart, you know the open. So you know market has to either close at the 50 points lower from the open or 50 points higher from the open. So you know where exactly the market is going to close and a new candle will form. So in these cases, when you place an order, decided that I would do a sell trade, for example. Okay. So I know exactly when to do a sell trade because I know that if at all, this is where I've decided I will do a sell trade. Let's assume. Okay. I've already decided. But in a case of regular candlestick chart, you don't know where the candle will close because the time you have to wait for that particular time interval to complete. Whereas in this case, if you know that the market has opened here, it has to either close below this, the new candle will form here, or new candle will form here. So if you want to take a trade, you can probably take a early entry once you have decided to take a decision on which side you want to enter the market. Okay, so you could probably have that few seconds or few minutes of advantage with these entries as well. So I don't see specific questions out here. So let me now go to the order flow analysis. If I missed anything, we will look at it later. Okay. So what I do is I will just go to cluster charts and I enable this. So it will do the same thing as you do with the regular candlestick. It's just that the candles are formed differently out here. Okay. And this will also help us to know whenever there is similar things. Like it is not that, there is a vast difference with the methodology of order flow at all. So that is why I said that I'm not going to tell you to unlearn whatever you learned based on order flow in the past. So what you see here is you will see a different way of looking into it. The formation of the imbalances will be slightly different as compared to the candlestick charts. For example, if you look at this particular imbalance, let me so if you see this chart, today's chart, you will see a lot of imbalances out here, okay? Whereas you will not see all those imbalances here at all. You will see imbalances here, which is probably common here around these levels. And this imbalance was missed in the regular candlestick chart. Why? Because market is actually forming a new candle with every change in the movement. So if at the moment 50 points are done, it will form a new candle from that point onwards. Now, if you look at this, and I would also like to look at it along with the cumulative delta. Now here you will come to know what kind of a volume has happened in that 50-point movement. Whereas in a regular candlestick chart, we will always look at what has happened in that period, interval, right? So 5-minute interval or something like that. So now if you look at the delta values, so here you can see that in this 50-point movement, there were 2,736 lots traded. What was the time? 9:16:06. The next interval, in the next 10 seconds, sorry, next 10 minutes, you saw another 2,826 lots of lots traded, and the movement was only, total movement was only 100. I mean, I'm not talking about from the high to low, but each candle, the total movement was 100 points. Whereas if you look at the regular chart, you see that the first 10 minutes, we saw a delta of only these many candles. So if I say 20, okay, so if I combine all these three, so it will be up to 930. So let's look at 930. So the majority of the volume has happened between 916 to 926. So this way you will be able to identify when exactly the big volumes are getting traded. And the moment, whenever there is a big volumes are getting traded, there is a chance that the candle will start forming as quicker as possible. So you're looking at something differently. And you can also, with this cumulative delta, you're clearly seeing a particular pattern that is happening, where you see a big candle forming out here. And this, whenever this such a big candle forms, and it is also taken out by previous big candles, this is probably a sign that the market is likely to move in that direction. Okay, I'm taking a very good example of today because market is moved one-sided since morning. So that is one thing that you can easily look at it. But here again, you look at this data. So market formed a big candle here of 2,267 lots traded in this particular delta. And in this candle, 2,267 delta. And market almost throughout the day remained below this level. Okay. So I think this is the biggest delta in this particular day. So you can see that there was market almost remained below this level. If you look at previous data, maybe you can look at this candle. There was a big movement and market again remained in this range and above that level till the close of the session. So there was a minor blip here because of some big delta out here. After that, again, you saw a big movement and market started moving one side. So these are the delta values that will help you to identify possible change in the trend. So I look at cumulative delta very carefully, what is happening with cumulative delta, whether the cumulative delta is breaking the previous big candles or not. So those are the things that you need to look at it when you're analyzing the data based on cumulative delta. So if you look at purely based on this candlestick chart, you know that these are the resistance levels for the market in terms of volume. So if at all the market has to really move higher, these candles has to be broken. Otherwise, market is not likely to go up sharply. So market has probably turned bearish since the last few days. So let's look at some of the candles here. Market is breaking the previous delta values. If you can see that market moved higher from here, okay, slowly started showing some weakness. Around the same level, you saw a double top formation in terms of delta, okay? And probably if you took this particular range, market is slowly breaking lower than this, and market is continuously showing a strong correction right now. So now where do you see a possible resistance? This could be one resistance. This could be a particular range where you will see probably another resistance. And you will see that all these levels are coincided by a bigger delta correction, which means that those who people who entered this market with around these levels, with this kind of a volume that they created, when the market comes down to that level, you will always see a bigger correction as well, and bigger delta formation, and that also will start reflecting in the price. So at the current market scenario, probably a new resistance would be around this level. Okay, market is slowly trying to, just a minute, if you see there was a big delta out here, okay, there is a big delta out here as well. So probably these two levels are very crucial for the market to push higher. Market may find probably some strength up to this level. Okay, now that it has broken and closed above, you will see that the cumulative delta probably going up to this level and started showing a weakness, and that also will start showing in the regular prices as well. So market may move a little more and then start correcting. Okay, so I will also show a little bit about crude oil as well, so that if you could see the crude oil chart here, because see, since morning only 5 candles have formed. Now this is the 6th candle that is forming since morning. I've taken 30-point ticks. Maybe we could look at 15 also. I don't know how much is the right tick for this, but I've just taken 30 points right now. But if I have to take 15 points, then we have seen probably about 15 candles since morning. Okay, whereas if it is a regular 5-minute candlestick chart, you would have seen so many candles, right? So this is something will help you to avoid noise, specifically if you're trading commodity markets, where markets are become very active only in the evening time when the US market opens, or maybe when a little bit of movement when the UK market or European market opens. So that is where you will see some kind of a volatility. Otherwise, they remain in a range most of the time. It is not that they will not move even during the daytime. If there is some kind of a news driven event, definitely they will start moving. However, most of the time you will see that until, if you see the previous day chart as well, so if you see until 6 p.m. you see only these many candles were formed. Okay, up to 7 p.m. let's say 7 p.m. as US open, and rest of the movement in the next 5 hours or 4 or 5 hours, you see much bigger, much more number of candles are forming. So this will help you to avoid noise within this particular range. So another thing that you can also look at here is also a power trade on these candles. So let me disable this. So here you can also see where exactly these big trades are happening. Okay, so now we know that a movement is we know that big candles are forming. There is a lot of delta that is happening. Big delta values are here, but you also need to see where exactly these volumes are happening. So you can see that there was negative delta here with this power trade. There was a negative here, negative here. Every time you see a negative delta, you can see every time you see this power trades today, most of them were negative deltas. So you know that the market is showing a lot of weakness uh, right from the beginning, and this also reflects in the power trade as well. So the power trades, you can click here, enable this power trade. You can set the timer of how many what volume you want, and you can select the time period out here, and you will also see these values out here as well. However, if you do not want to see those values on the right side, you can click none, and they will still be available for you to see it on the chart. So what is RH, RL values, and how to study it? Okay, RH and RL values. Let me go back again to the cluster charts. So these values, a small value of RH value, you can see. So here you can see a small value of 0.4. For me, when I look at RH and RL values, I look at anything about the T value or anything below 0.50 as an important benchmark for me to take any decisions based on this particular data. Now, again, you need not only depend on this data, but this data only indicates that at this level, this low levels, market has a lot of limit order sitting. Okay. And this particular level is going to be a possible support level. Now, if you look at the entire day, and let's look at the entire day and where all we see such values. So let's avoid first initial few bars, no problem. So here you see that in this range, you see RL value of 0.24. But this is a red candle for me, so I don't look at, if it is a red candle, I would like to see what is the RH value. Okay. If it is a green candle, I would like to see the RL value. Hope this is clear. Okay. So if it is a green candle, start looking at what the RL value is all about. If it is a red candle, start looking at what the RH value is all about. Now, what happened here is this is the red candle. So market probably has possible downtrend possible in this particular at this particular time. However, when the next candle formed, okay, it closed in the green. Market opened lower, closed in the green, and you saw that there was a RL value with a very low value, which is of 0.11. This is an indication that there are a lot of resting orders or the limit orders at this level, which force the market to move higher. Now, this doesn't mean that this could be the low for the day, okay? But this indicates that there are a lot of limit orders in the market. Even without looking at the market depth, you can identify them. And because of that low value, you will see the market recovered from this level. But what happened here? You also see a bigger RH value with the next candle, which indicates at this level, there are a lot of sell limit orders as well. Okay, again, this value is not within my parameter of 30 or above, but it is still a value that you can look at, which indicates that there are large limit orders around these levels. Not necessarily at the exact price, but around these levels. Again, when the market started coming down, you also saw again another very low RH value, which indicates that in this range, there are large limit orders are sitting. Now, we will not come to know unless and until market reaches that level. And what happens at that point? You could see when that happened, there were a lot of power trades. You will see when this level was broken, okay, there were a lot of power trades. Why those power trades? Because of these large limit orders were there. Somebody selling, and even people are absorbing those orders at this level. But the strength of the sellers was so big that the market still managed to go lower. And you can also see that a very low RH value also formed here. This is an indication that at this level now, there are large limit orders around these levels. And you see when the next candle formed, again, you see a RH value around this level. So all these buyers who were who kept their limit orders now are probably exhausted, and there are new selling that is coming in with the renewed selling from the new players who are probably selling at market, and the limit orders who are already kept, these buyers who wanted to buy at this level are all exhausted, and again a new round of selling that is coming in, because which can be seen again with a very high RH value. So for me, if the candle is red, I look at RH value. It should be either below 0.50 or above 30. So in both these cases, these criteria meets. So I consider that at this level, there are large sell limit orders. Here also there are sell limit orders. Let's proceed further. Here again, you see that there is a very small RL value. But since it's a red candle, I don't give any importance to it. But it indicates that there are limit orders out here as well. So you can see whenever the levels are broken, you will see a bigger volume as well. Again, there is a 0.13 very low RL value. Again, very low RL value. So by the time the market reached here, which is 0.33, which is a first indication that this particular selling is getting exhausted around this level. This again does not mean that this is the low for the day, but more often market will start finding support around this level, and that's exactly what happened. Market started consolidating for some bars. You see, you can see the 0.33 value here, okay, and a green candle, and market started showing some strength out here. Again, you see, as and when market was going up, you will also see a very high RH value. This is an indication around these levels. Now there are limit orders, sell limit orders. Now just to give you this information about what I'm talking about, here you see what happened. When the market broke this level, it started showing bigger and bigger trades, because all the buy limit orders that are there are getting executed by the sell market orders. And market again moves lower. And you see in the next candle, let me remove the power trade. In the next candle, again, you see a high RH value. So if you start looking at these RH and RL values, you will probably get an idea where exactly the big limit orders are sitting. Now, that does not mean that it could be a reversal level for the market. But yes, if the market is breaking a previous low, and if the RL value was very, very small, there is a likely chance that there are a lot of limit orders residing at that level. And when that level is broken, you will always see bigger trades happening, maybe a point of control that is happening, or maybe the power trades. All that can be captured through this information. So again, if you start seeing this, let me put the power trade so it gives us some more information about what is happening. So here you see continuously, you'll see that there are low RL values are forming, but these are all red candle, which is of no importance to me, because market is continuously going lower. Here at this bottom, we do not see a very low RL value. So it is a RH, so it's not so much of importance, though the candle is formed higher. But what happens here? You see, this candle. Again, you know that there are limit orders at this level, and market started recovering from those levels. So these are the things that you can look at while basically you can look at the possible limit orders residing at these levels and get an identity. You can identify them even without having to look at the market depth. How can we do entry exit using cumulative delta info? I already explained what I look at when I look at cumulative delta. So when I look at cumulative delta, I follow the same concept of candlestick. If the candle is big, candle is green, there is a possibility that the big volume is happening out there. That unless and until that volume is not broken, market is likely to remain strong. It may correct a little bit, but that level can act as a very strong support for the market. So especially like now, if you look at this particular data, so there was a big cumulative delta red candle here. Now these are the strong resistance levels for the market. These small candles are of no importance to me, but these big candles definitely makes us, we have to keep looking at these. And now if you see, this probably is a level where if this candle is closed by a big candle, that means that more further selling is possible in the market. So the question is regarding how many ticks to put in the custom steps in cluster charts for Nifty Bank Nifty. So you can still use the 200 for Bank Nifty, 60 or 80 for Nifty. Okay, so there are some questions regarding RH, RL values. Let me once again explain. So I'll remove all these things first. Let me remove the power trade as well. So the concept of RH and RL is very clear. If I'm looking at, if the candle is red, then I start looking at RH value. Okay. And then the value should be either below 0.50 or above 30. That is the value that I look at. You could even look at 0.20, 0.30. That's entirely up to you. Either it should be below 0.50 according to my observation, and anything above 30 is a better value for using this. So both values are good for me to take a decision to understand at what level there are large limit orders sitting on the market, even without looking at the market depth. So now if you look at this here, this particular candle, because it's a green candle, I will start look at the RL value, which is 0.11. What does this mean? That means at this level, there are large limit orders. So if at all you're taking a trade based on this information, you have to be very, very clear that if this level is broken, market is likely to see a bigger correction also. For the simple reason is that there are large limit orders. If these limit orders are taken away, there is a possibility that you might find a support around these levels. But once these levels are taken away, that means that there are no more big limit orders out here. Okay, unless you see a big value or very small RL value here. Okay, so this is where what you need to look at it when you look at the RL value or RH values. So now that market has broken this level, you can now start looking at the RH value, which is below 0.50, and this candle, the RH value was 50.50, which is above 30. So these are the levels where you will see a resistance. So now next resistance for me is this. Because of this, there are large sell limit orders out here. So if I take any trades based on this information or based on whatever data the signals that I get, I need to be sure that anything above this level, if the market goes up, there is a possibility that all these sell limit orders can be taken away by the buyers, and market can strongly move up. So in such cases, you'll probably see stop loss hitting multiple times. So as the price moved lower, you saw market continuously going down and a green candle formed. Okay, here the RH value is 0.33. Again, it meets my criteria. So I assume that these levels, there are again large limit orders are available. So if this level is broken, probably you'll see a bigger correction. Hope this is clear. Thank you so much for attending this webinar, and do join us for the webinar tomorrow at 7 p.m. We kept it at 7 p.m. specifically because we are going to talk about commodities trading through Quantower. I am going to talk more about how you can do commodities. What are the things that you can look at while trading commodities in the Indian market, specifically be it is gold, silver, crude oil, copper, natural gas, because I've been trading these markets for over a very long period of time. So I can give you a lot more information about this. So this we kept it at 7 p.m. tomorrow. So you do join us for this webinar, and the link for this will be shared tomorrow during the day. Thanks a lot.